Hi, this is Alan Laubsch with Financial Network Analytics, and welcome to FNA Correlations. This is our global multi-asset class dashboard, and it consists of 41 of the most liquid ETFs in the world, representing all the major asset classes. And we can see here that the systematic risk has spiked and is close to a 100-day high at 56%, meaning that 6% of the volatility of all of these assets is explained by just a single factor. So systematic risk is quite high. Given that, flight to safety assets have been quite popular. And this is quite an interesting day in which you can see a flight to risk. So all the risky assets here at the center experienced major outliers, positive surprises. Germany topped the list here, 2.3 standard deviation move, 3.6% upside. Technology stocks were the second biggest surprise, jumping by 2 standard deviations, or 2.9%. So the way to read these maps is that this is a correlation map. Assets that are close together are highly correlated. So in other words, if the link is a short link, the correlations are high. For example, the correlation between oil and commodities is about 0.9. That's a high correlation. A slightly lower correlation is the correlation between oil and the energy equity sector, XLE. That's at 0.83. Negative correlations are represented in red. For example, here, the correlation between the 20-year government bond, ETF, and financials, which stands at negative 0.72. If we click on that, we can see a history of that correlation as well. We can see this is actually the most popular flight to safety asset, the US long bond. It has the highest negative correlation currently to risky assets, negative 0.72. And you can see this correlation has really remained negative quite in a quite stable fashion. It was briefly slightly positive, 0.26 in December. Not a big deal, but generally has been quite negative and has been as low as negative 0.73. So that is a good flight to safety asset. Now, of course, what happened yesterday was the opposite. There was a flight from safety assets, such as the 20-year, the total bond index, corporate bonds, and other fixed income instruments into the equity markets here at the core. Now, the second popular flight to safety asset that you'll see here is the Japanese yen, slightly lower correlation at negative 0.69. And if we look at that correlation, that link is to Japan. So for Japanese equities investors, generally the yen would be the flight to safety asset here. You can see this correlation also generally has remained negative. The last time it was positive was in June of 2015, and it's been as low as negative 0.81. So that's been quite a reliable flight to safety asset for any risk assets, and has a very strong link with Japanese equities. The third flight to safety asset is gold, and that's become very popular. You can see gold is the weakest flight to safety asset with a negative 0.61 correlation. You can see that correlation was quite strongly positive, up to 0.37 as early as December. So it's not a very reliable flight to safety asset. If we look at gold from the asset perspective, you can also see that the volatility of gold has been very high. It's just coming off of a 20-day high of 1.5% per day on the 18th of February. So that makes it quite an unreliable flight to safety asset, although currently it is quite popular, given that its correlation is close to a 100-day high, and we haven't seen negative correlations like that in well over a year. So this is gold has become popular as a flight to safety asset, especially for holders of Chinese equities, right? So whenever Chinese equities plunge, if you're concerned about a China devaluation, for example, gold is probably not a bad asset class to consider in that case. So these are the three flight to safety assets that we're seeing currently in financial markets. I hope you found this interesting. If you have any questions, please feel free to email me at alan@fna.fi. Have a great day.